My name is David H. Smith. I've been working with David Morgan at the Morgan Report for almost 2 decades. This little picture shows me up in interior BC looking for a silver property. We came in on this little platform here, and we had to kind of duck down and crawl along the floorboards to stay below the propellers. My topic is gold, silver, and miners demand tailwinds that are going to push this bull run to new all-time highs. A little bit of a disclaimer here. You're responsible for your own decision making. I don't give financial advice. I give suggestions and have you look over my shoulder. These are the assumptions of the presentation, that it's a third inning of a once-in-a-lifetime bull run in gold, silver, and the miners, that there are proven strategies that can put you in the winner's circle over the next 2 to 5 years, that most investors will exit the market too soon and leave a lot of money on the table. Many more will wait around too long and give back everything they've accumulated. This tends to be the way it goes for bull runs. But if you have pre-planning, you can minimize the risk and maximize the gains against the above. And this is exactly what I'd like to help you do, along with your own knowledge base that you bring to this discussion. There are 2 things you cannot afford to lose: your investable money and your emotional capital. If your psychological capital is destroyed because you are emotionally wiped out in the market, it doesn't matter if you have a $5 million trading account, it will be worthless to help you earn and make money. So it's important to be bold, but at the same time, you need to be right. That's why you have to balance these 2 things out. The problem we're having today is probably unique in our lifetimes. We're not just trying to make money and limit risk in a bull market. We have a situation with the COVID-19 that's going around the world. It's changing everything, socially, politically, everything we do, the smallest things, and we're trying to function as though everything is normal in an abnormal market. And now we have this bull market, which is becoming very emotional as the public is discovering the metals and the miners, and we have to kind of keep all that in balance. And you and I are all in the same boat. The reality is, and if you read the book, The Fourth Turning, about how things change every 70 or 80 years in the United States, and we go through a great gate that can actually determine our existence as a nation, the last of which is World War II. When a new paradigm happens, that means there are new rules that are needed to move that paradigm and for us to be successful in it. The old rules do not work. So we're all discovering the new rules, not only about the health with COVID, but also investing in the metals and miners in this new paradigm. These are some survival tactics that will help you to not get blown out of the water. And the markets right now, while I'm talking, are as volatile as I've ever seen them in my lifetime. Gold has had several closes above 2,000, which had never happened before this week. Silver is just below $29, which wasn't supposed to happen until next year. And the Dow is still hanging in there. So we just have to kind of figure out what's going on, but not wait around for the answers. The market doesn't tell us the answers ahead of time. We have to kind of guess and apply our own skill sets in order to swim in that kind of a water. The market has been oversold for several weeks. I'm sorry, overbought. And it stayed overbought and it's kept going higher. So people that got out of the market because it was overbought I've left a lot of money on the table. Now that could change today before the market closes, or it could go on for a couple more weeks. We do not know. That's why it's important to have a plan and to not go all in or all out at any time. Our book that David Morgan and I co-authored, Second Chance, How to Make and Keep Big Money from the Coming Gold and Silver Shockwave, which actually is in play right now, can help you not get blown out of the water, can help you make a great deal of money, and can help you keep most of it and not give it back as the bull market gets older, which is what most people do. We don't know of any other book that tackles it quite this way. What you want to do when you put all these things together is the Japanese phrase, misu no kokoro, mind like water. You can see this picture here that I took a couple of years ago at a nearby bay, the clouds are perfectly reflected in absolutely calm water. The sky looks like it's below you and above you. You can see the ground in the foreground here. And when you are calm and when you understand your plan and you're working your plan and you understand the rules, you can go into the market, which is a battlefield, and be calm and collected and think only of the cut when you make a decision either to come or go from a position in the market. Miyamoto Musashi was Japan's greatest swordsman, and he never lost a swords duel. It's about 65 or 70 that he had in his lifetime, and he was a master of his craft. This is what you want to become in your trading. You want to become unmoved by what's going on and flow effortlessly and seamlessly in carrying out your plan and minimize your emotions. We never get rid of the emotions, but we minimize them so that we're not reacting, but we're acting, ideally a little bit ahead of time. Here's an interesting gold saucer market. It indicates 4,000 on gold. And you know what? We think that that could be halfway there. And could take place over the next 2, 3, 4, or 5 years. It could be a blow off that ends in 18 months. We just don't know. But if you play by your plan and you pay attention and you keep calm, you should be able to keep most of what you make and get out ahead of time and not give it all back by buying at the top and continue to hold everything that you have. You will have to accept risk. If you don't go into the market, you're accepting risk of inflation, of loss of other type of assets, and all sorts of things. If you do go in, you have to accept the risk of being in that market. There is no such thing as no risk. This is the most asymmetric trade I've ever seen in my life with silver. It's moved up quite a bit already, but we think it will go into 3 digits, which means that this move is just getting started. We could have a violent correction at any time. It might last a few days, it might last a few weeks, but it will not be the end of this bull market. And the key for you will be to not get shaken out, to not have trading in and out so that your funds dissipate. You will need to be careful about what you do and be careful getting in and getting out and stay calm. And if so, the efforts that you make can bring you rewards beyond what you can imagine today. We have this massive grinding of 2 plates against each other. The subduction zone is the plate grinding underneath the surface of the metal supply, and more tension builds up, and eventually there's an explosion, and that's exactly what's starting to take place now with massive demand for gold and silver, such that people are moving into the mining stocks because they can't find the physical. Silver production has been tailing for 4 straight years. You're going to see that yields per grams per ton have been dropping. New discoveries have not been being found. It's been taking longer to develop new projects. All of these things crunching against demand globally. This is the first time it's been worldwide demand, means that silver and both silver and gold are going to rocket higher into the future. Fresnillo is one of the world's largest silver mines, primary silver mines. You can see how their grades in grams per ton have declined steadily for the last decade, down to the point where they're down over half. Every ton of ore they dig out of the ground now has 1/2 the silver that it did 10 years ago. That affects the cost of doing it. That affects supply. It affects everything across the board. And Fresnillo is not alone. You can see the top 7 primary silver mines and how their average yield has also declined by over 50% in the last 10, 12, 15 years. And primary silver mines are relatively rare. There may not be 2 dozen in the world. Most silver, 2/3, comes from base metal production of copper, zinc, and lead. And so when the demand goes up, like it is now, you can't just ratchet up the silver production because you can only produce so much more copper, lead, and zinc at a given time to get more silver, and that's going to fall on the primary silver mines. the very few that there may only be really 12 or 15 really powerful good ones. And people, the investors are going to be driven into that little tiny market trying to find and take positions in these primary silver mines. And they have startling potential going forward. Some of them have doubled and tripled, but they have the potential to go up another 5 or 10 or 15 or 20 times as this market gets into a situation where it eventually ends in a public mania with people lining up around the block to try to buy silver at coin shops and putting money in anything that says silver in it in the stock market position, which impossible to predict just how high these things are going to go. Great potential profit, great potential risk, very exciting opportunity if you're willing to accept that kind of a situation. Last November, silver jumped $5 overnight. Now, it didn't stay there, but the point is the fact that they could do that, even for a few minutes, is a harbinger of things to come. I believe before this bull run is over, we're going to see what I call a Bitcoin moment, where you remember a few years ago, Bitcoin shot up from about $900 a piece to less than 12 to 18 months later, 20,000 a piece. And we're going to find out that, in my view, this was not an outlier, and the $20,000 Bitcoin was not the all-time high by any means. It was simply the first cannon shot out of a battle that's going to take place that will carry Bitcoin potentially into 3, 4, maybe 5, maybe even 6 digits in the next few years. Meanwhile, we have the Asian silver vacuum cleaner with the SGE silver taking 25, 30, 40, 50 tons of silver delivery every week of physical silver off of the market, off the ability for other entities to purchase it. And by the way, China a decade ago was exporting 100 to 200 million ounces of silver a year. Today, they export none. They import hundreds of millions a year. That's how drastically this whole thing has changed. Last year, India demand took up 40% of the world's production of silver. Here you see the silver gold ratio, which has been as high as 125 to 1. I think it's now about 80 to 1. You can look at these different ratios for $10,000 gold and see where silver would be at that price. And let's say that you feel that $10,000 gold is way too optimistic. Let's call it $5,000 gold, which I think is, as the Canadians would say, is written in the rocks. So at $5,000 gold, take these figures and cut them in half, and you still get triple-digit prices for silver. It has a huge, huge upside potential. The physical, the mining shares, and eventually also the third leg of this, which are digital-backed silver on the blockchain. Here you have different ETFs around the world, and since this was put up a couple months ago, these numbers have continued to rise. All-time highs of deposit by shareholders buying into these ETFs, which then have to go into the market and back those new shares with gold and silver, and these continue to rise. And the spark, iskra, which is the Russian term for spark, that spark is now being lit under a powder keg of dynamite as people around the world try to get silver and gold physically and buy it. And in the United States and Canada is just two examples. I know people who have been in this business for 40 years. They all say they've never seen anything like it. In Canada, if you try to buy a tube of about 20 or 25 silver, Canadian silver maple leafs, you could wait a month for that tube. So this is really amazing. The U.S. Mint, for the first time ever, has said we can only make silver or gold eagles at one time, not them both. And so we have to decide where that demand is. And right now they're concentrating on the silver eagles. So it's going to get more and more tense as the pipeline gets more and more constricted. Here's gold demand in the ETF cumulative change. That's the bottom maroon color on the bottom. But look at the top gold chart. That is the amount of actual gold that is coming out of the physical market, going heaven knows where, going into Swiss vaults, going into holes in the ground, going into socks in people's homes, going into PVC pipes in the backyard. A lot of gold that is unreported in the ETFs is being sucked out of the supply pipeline by individuals, by large hedge funds, by wealthy individuals. Here we have the massive breakout of the stocks, the gold and silver stocks versus the metal. Now, for many, many years, going in some cases back to the 1960s, gold has outperformed the mining stocks most of that time. That is changing now, which means that you, someone who may choose after you get some physical metal to participate in the mining stocks, the potential for the time that you spend when and if you get it right on a particular company or a portfolio will reward you all out of proportion to what you may have done even in the bull run from 2000 to 2011. So this is really a target-rich environment. There are many stocks that are worthy of your consideration. Choose wisely, and you could be shocked at how much you make based upon the effort that you put in and the money that you risk. You don't have to take out a second mortgage in order to turn in a double-digit account into a 3, 4, 5, or even 6-digit account over the next few years. You just have to be wise, keep calm, follow some basic rules, be humble, and do a few things that we discuss here, which will put the odds massively in your favor. So this is the first of 3 tailwinds I'm going to discuss about investing in mining stocks. Here you see the gap. This is another tailwind. Usually the gap between the large and small miners is pretty close, as you can see. And down in 2012 and 2013, they were equal. They tracked each other exactly. But look at the gap that's going on now. It means that mining stocks, the juniors, are massively undervalued in relation to the seniors. A senior is not going to go up 5 times probably, but a junior might go up 10 times in terms of the relationship of the price to the junior and the senior. So folks, have some seniors. They're safer. They'll keep giving you money and dividends. But the juniors is where the outsized potential rests if you choose correctly. Here you see the ratio of spot gold to the XAU, the gold index. Look how far apart it is. It's going to revert to the mean. It's going to go back up into that red box that you see above there. And not only that, it's going to overshoot. It may go up like you saw in 93, but it's going to change the relationship of gold and silver to the miners. And if you're on board that trend, you're going to be very, very happy if you play it correctly. Here you see again, look at this opportunity, the greatest since the 1940s. This is not going to come again. You don't want to miss it. You don't want to blow yourself out. You want to stay calm and stay in the game until the last part of the innings. And one of the things that David Morgan does in his Morgan Report letter, he is excellent at picking tops, and he will admit it. I'm not so good at picking bottoms, but I'm very good at picking tops. In the 2011 top, which had the all-time high from 2011 to 2012 for gold of 1923, David Morgan called that top publicly and to his subscribers within 1 day. And I believe he's going to do it again very close. It might not be 1 day, but it'll be close enough that his subscribers will be able to decide to get out with most of their earnings. And then in our book, we actually have a way to stay in the market with some of your earnings. And if the market goes up much farther than even we thought, you're still in play, but you're not risking most of your earnings. And you won't be like the majority of the people who will follow that market down when it inevitably ends in a crash. Look how long it's been since that last market took place, that massive red mark on the right-hand side. The bigger the base, the greater the upside case. This is what old timers have said in their trading for 100 years. It's what Jesse Livermore said, the world's greatest investor in the 1920s. This is going to be a powerful, enduring, massive bull market. It's going to call all the top callers wrong. It already has. A lot of the best minds have been saying, get out of stocks for the last month. Sell the miners, they're overbought. Sell the metal, it's overbought. They said this at 1850 gold. They said it at 2150 silver. And now gold is 2080 right now. And silver is $29. And some of those people are still waiting for a correction to get back in. Now, there is going to be a correction. Maybe it'll correct from 32 to 26. Maybe it'll go back to 21. But the point is, if you've been out of this market and you sold your core, you've been watching. You've been a spectator rather than a speculator. That's why you have to balance being in with being out. $26 to $49 silver is what I call volcanic tremors. We're already at 29. When silver breaks above 50, we're going to see a pyroclastic eruption. We get a few closes above 50, it'll be at 65 or 70 in a heartbeat, on its way up to 3 digits. This is a massive opportunity, and it's going to call out the animal spirits across the board where people try to buy silver and silver mining companies regardless of the price. Here we are. Maren Katusa did this, and others have done the same thing. Look at where we are in relationship to past bull runs. Imagine what it's going to look like when we take any of those other 3 charts that you see there, which will build out over the next period of time, whether it's 18 months, 36 months, 5 or 6 years. It's going to happen. It's going to be something bigger than most of us can imagine right now. Here's a big mistake I made. One of our analysts, Chris Marchese, who used to be with the Morgan Report and is now with Gold Seek and Silver Seek, writing excellent material and information over there, he found Kirkland Lake for our readers at $5 a share, $10 below what you see here. I got in around, I don't know, 16. That thing ran up to 22 and it started dropping a little. And I thought, you know, let's hang on a little longer. It got up to 25. I decided to take a nice profit. I sold all my Kirkland Lake, and I watched that go up to $55 a share for the next 18 months, and I watched it. So that's what happens when you sell all of a core position and think that you're smarter than the market. I've come to understand completely now that I'm not smarter than market, and I never sell all of my core unless there's a compelling reason to do so, unless that company is no longer performing the way that I think it should in terms of risk reward. But I think about it carefully before I get out so that I can try to avoid another Kirkland Lake. Here's a palladium chart. Now, I think this is what's going to happen to the silver market. Don't pay so much attention to what the price is and relate it to silver. But here you had a 20-year market that what in 2001 topped out, and this is where Ford Motor Company sold their palladium at a couple $1 billion loss. It went down into a bear market for a number of years and struggled on up, and finally in about 2018, it made a new all-time high. And I was participating when this happened, but I thought, you know what? This is a 20-year high. It's not gonna, this is it. This is the end of the bull market. And instead of selling a little bit, I sold what I had out in my shares. And I felt like a hero when it went down to about 900. But then look what it did. It moved on up and it went above 1100. And I watched it go to $2,800 an ounce and stay there for a couple of years. This is what happens when you think you found the top and you sell all the way out. That's okay. If you're a sandwich trader, that's not wrong. You can make good money, but it's really hard to watch it triple after you sold out thinking you sold the top. There are strategies we have to do this. And I think this is what's going to happen to silver. At some point, I don't know where it is. It might be $90. It might be 150. It's going to make a top. It's going to have a violent reaction and go into a sideways movement for a period of time. It's going to shake off just about everybody that thinks, you know what, this is it. All the experts are going to say it's going to drop. They're going to get out. It's going to creep up above where it was, and it's going to go up by another 100, 200% from wherever that was. That's what you have to be careful not to miss out on. David Morgan has studied this profusely, and he's shown that as much as 90% of the profit potential can come and does come from the last 10% of the time of the market. And this is further supported with a beautiful quote that came out this year from Incrementum. I'm going to read it. It's so powerful, and I want you to remember it. One can see that every gold, and you can place silver in this too, bull market always ended with a parabolic upward trend that lasted 9 months on average and at least doubled the price, presenting us with a potential once-in-a-lifetime opportunity. Do not forget this quote. Do not keep all of your money in the market, but enable yourself to be in there in some fashion that you're comfortable with, so that in case you're wrong and it doubles after you thought the top was in, you get to participate, not just watch. The Pareto Principle is one of the most powerful things you can use in your life for all sorts of things. 80% of the effort that comes back to you on a job, whether it's building a wall on a house, whether it's paddling 300 miles, whatever that is, 20% of the effort that you make will give you 80% of the results. And I never thought so much about this in terms of investing in mining stocks until I listened to Peter Groskopf give an interview a couple months ago. And all of a sudden, when I thought about what he said, it was so powerful. It changed the way I've been thinking in a matter of a few days, and it has absolutely supercharged my earnings since then. He said when others are selling, the top investors are buying, and the reverse. Now we know this first one. That's not anything new to anybody. We struggle with that all the time. But then he said this: these people that are very successful know how to keep their winners, usually via the 80-20% rule. 20% of your investments will make 80% of your returns, and the rest will probably subtract from that. So I went in and looked at my 30 stocks, and by golly, 6 of them were ones that I identified as those 20 percenters. And the others, they're doing pretty good. They're mostly in the green. I have one dog that I think is going to be a 20 percenter, but it isn't hunting yet. But when it does, I think it's going to do well. So I'm going to hold on to the faith. And I looked at the others, and they're doing okay, but they're not doing like the 6. And I found out that for me, I didn't have enough of the 6. I wanted to really overweight. If those are going to be the ones that do the best, I want to have a big chunk. So in some of them, I doubled my position. In 2 of them, I was up 40% in the next week after having done that as it started to move upward. This is very powerful. Please think about it. Apply it to the way that it fits you. There's a massive change taking place, and I'm going to tell you right out of the box. We have followed this company for 4 years intimately. We were there when it got started. It is not doing what it should in the market. We don't know why, except that I think people don't believe it's possible, and also not many people know about it. But this stock is kind of sitting there quietly, and I believe, and David Morgan believes, when and if the business model is correctly executed, it could give returns that are almost unbelievable, because it will change the face of e-waste and the mining industry beyond anything that's happened in the last 40 or 50 years. By definition, because it hasn't moved and because it hasn't been fully proven in the market, it's high risk. But by definition, because it hasn't moved, it's also low risk. It is an asymmetric trade. If and when this business model is successfully executed, and this can happen over a period of years and decades to fully realize the value proposition, this stock could become a legacy investment. It could create generational wealth. You have to be willing to risk it. You may need to risk 100%. We don't think it's going to go to 0, but nobody knows. But if it works, it could be really, really massive. But it's been frustrating so far. We keep coming back and looking at it, and the figures always look the same. It looks like a winner. Nobody's been able to handle e-waste until this company came along. 80% of e-waste has been buried in the earth or burned up to get the metals out of it, creating some of the most toxic places in the world. This company grinds up computer boards and electronic waste and gets gold, silver, and other metals and tin out, and does it without any tiniest of footprints, and ends up with an inert white compound that goes into concrete to make it stronger. So this has never been tackled before. The build on this, out on this, you can see they grind it into what are called fractions, and a certain amount of it goes through a dry cycle, and a certain amount through a wet cycle using Enviro circuit, which is it's approved by the FDA. You could drink it. It's hard to believe, I know, but they use electrowinning and other processes to get the metal out. The metal that in the wet cycle that is in a concentrate is sent to Glencore, among others, and smelted out into metal, which is reused. The plan is to build 6 companies over 6 years, 6 operating sites. There's one in Surrey, BC that's operating now. Here's the value proposition is the e-waste. By the way, every minute you're listening to me, 100 tons of e-waste is generated globally, and 80% of that's going into the ground. The other 20% is being burned to get the metal until this company came along. The second value proposition is going to be to take gold, silver, and uranium and other metals out of the ground via extraction in a way that does not disrupt the ground, and it only takes the metal and leaves everything out. There's no open pits, no ponds, no smelters, no cyanide. This is being developed as we speak. Several of the world's largest gold mining companies have NDAs looking at this product and seeing that it works, and it's been proven in many different cases that it does. So when and if this business model executes itself in the way that it needs to so that the market believes it and starts getting more eyes on it, it could be really something to behold. These are the benefits to the mining sector. This is something that's too good not to believe in our view. EnviroLeach technology is the gold standard in metals abstraction. I wrote this by invitation. I was not paid to write it. I was talking about EnviroLeach and Group 11, which is a skunkworks type of operation that is being put together. And the partners in that are Golden Predator, Encore Energy, which is a uranium company, exploration company that's headed up by Bill Sheriff, one of the top lights in the uranium space, and EnviroLeach. These 3 companies it'll be a privately operated company, research company, kind of like the skunkworks in World War II that created this SR-71 Blackbird, creating new opportunities for using reagents in the leaching of uranium, gold, silver, and more. Here you have, look at all these people that are unbanked around the world that have a mobile phone. They know all about the mobile phone. They don't need to be taught about blockchain technology. Blockchain technology on a distributed ledger is and is going to, and it will continue to change the world. You need to know about it. You need to pay attention. At some point, you will participate in it. The people that are participating now are going to start creating opportunities for life-changing wealth as silver, gold, and other entities are placed on the blockchain in an immutable record to be kept for those transactions. One of those which we follow, there are 75 or 80 different attempts that we know of trying to create a digitally backed metal on the blockchain, a coin and or a token. Some of these are just basically glorified storage opportunities. Others are ones that are trying to do something kind of half-hearted like what the LODE project is doing. Some of them have already been blown out of the water. Most of them have trouble because they can't meet the local regulations where we are. The LODE project, of which David Morgan and I are ambassadors, we talk about it, and it's not like a company with a management team or anything like this. There are people that do a lot of the heavy lifting, but there's been an enormous amount of time and effort and money spent on getting regulations to accord with in North America and in Europe. There was a very large legacy investor which just put in a number of million euros into this project. There are people contributing from 51 different countries into the LODE cryptographic token and the AGX coin and now the AU coin. So these coins are being backed by gold and physical silver vaulted in 7 or 8 different secure vaults around the world. This is something to take a look at. You can find out information about it at load.one. You can see some of the 51 countries that people have vaulted from as individuals. It's continuing as we speak. This is a monetary system. It isn't just how to store your gold and silver. It's meant to be a system where people can buy and sell things around the world digitally using gold and silver, and also storing gold and silver for investment and for speculation. It's digital, it's private, it's high speed, it's peer-to-peer, silver and gold money for everyone. The unbanked millions around the world, in India, in Indonesia, in Mexico, in South America, will have access to this on their smartphone. They won't need a bank. It'll be private. It'll be a permissionless network. It has the potential to change the world of money. Nothing is ever guaranteed, but so far so good. And they look like the strongest horse in the race in this category. Bitcoin is not an enemy of gold. It's not a competitor. It's not going to replace gold. Gold's not going to replace Bitcoin. But Bitcoin is not something that's going to go away. The doubting Thomases are falling by the wayside. Bitcoin today may hit 12,000. It's just below it as I'm presenting this. It's been as high as 20,000, as low as 3,000. This is something to pay attention to. It's the gold standard in digital coins. There are several thousand coins. Bitcoin, Ethereum, and a few others are the lead horses in this. And Bitcoin is not going to go away. It's never been hacked. A lot of people still find difficulty getting started on it if they don't have, say, a Coinbase account or something. This is an opportunity. If you don't want to hold Bitcoin or take a chance on losing it on a wallet, you can buy the GBTC, which is an ETF traded on the OTC during normal stock market hours, and they buy Bitcoin as people buy more shares. And I hold this myself as a speculative vehicle, and this will profit a great deal if and when Bitcoin continues this move on up to 14, 16,000. There are calls that by the end of this year, it may reach an all-time high above 20,000, perhaps 25,000 or higher. Some of the statistics for the next few years are almost unbelievable, but this is a new paradigm, and it's as more and more people come to understand it, and as some of the world's largest brokerage houses are now being given to hold it as a custodian, which is a massive legal improvement for them. They could never do this before. You're going to see Bitcoin, of which there have never been more than 23 million, of which 3 million have probably been lost. It's going to be trading in a millionth of a Bitcoin. It's called a Satoshi. You're going to see millions of people trading Bitcoin. They're going to be holding fractions of a Bitcoin. If all the millionaires in the world wanted one Bitcoin, it wouldn't be enough. They could only have half of a Bitcoin. That's how rare these things are. They can't be printed indefinitely, like what David Morgan calls paper promises, the money in your pocket that loses 5 cents on the dollar every year. And that's not if you're in Lebanon or Argentina or someplace else, it loses 50% or 500% a year. Here's the breakout of the GBTC. It only trades during market hours, not on extended hours. Bitcoin trades 24 hours a day, 7 days a week. So there can be big moves when you can't get in or out because this market is closed. That's the primary disadvantage. It has great liquidity. It'll be like 1 point bid ask. Other than that, can't trade it 24/7, and maybe it'll go to a New York exchange at some point. But until then, that's your biggest negative in my view. So we have ripples to shock waves. This is what's happening the first time in history. A trifecta of a theme operated upon simultaneously around the world with a shorter time frame. This could be an 18-month bull run in the metals. We don't know. It could go 3 years. It could go 5 years. It could go 10. We have to watch and see. Cell phone enables blockchain metals trading as honest money. And this is going to be a new demand factor for physical gold and silver that was unanticipated by the mining sector. That's the third tailwind leading to a moonshot in the mining shares that produce the gold and silver. not to mention the price of gold and silver, not to mention the demand for the digital coins that back it successfully. You need to be informed about the blockchain, keep reading about it, read George Gilder's book. It's a little bit deep sometimes, but he's called the shots a number of times on things 10 years before they happen. I don't think he's going to be wrong this time. Hold on to your psychological capital. Mining shares catch fire late in the cycle. After the public runs to physical, they'll go to mining shares. David Morgan said this. This is exactly what's happening. The blockchain is going to change everything in our life. Keep learning about it. Here's some carbon-free carbon replacement deposit, smelter-free copper that's been discovered in Ecuador. You can figure out who is doing this. I know the individual personally. I consider him a colleague and a friend. He made the largest gold discovery of the last 25 years in 2006 in Ecuador. He's doing it now with this copper deposit. It's so pure, it doesn't need to be taken to a smelter. It can be refined in situ using low impact environmental methods. He's on the cusp, I believe, of discovering the two lost cities in Ecuador, that gold that the Spanish conquistadors said in the 1500s were the richest mines in the Spanish Empire. You can imagine what might happen to his share price if he's able to pull this off. David Morgan has a free weekly letter. He has a yearly letter, which is very well subscribed to by individuals, by high net worth individuals, by hedge funds that read his letter. So you can get either one of those opportunities. An awful lot of people that read listen to his weekly presentation, end up signing up for the Morgan Report. It's well worth your time. He's profiled more mines, more exploration companies that have gone to producing mines than anyone we know of out there. You can hook on to his information here with getting onto your mobile phone, and you can find him at themorganreport.com. You can write to support at the Morgan Report to get more information. So the technical tools here, I have some more I can go into, but I think I'm running short of time. I want to leave time for people to ask questions, and I'll answer as many as I can. I love to do the Q&As. Sometimes it's text, sometimes on talking, whatever. But however this venue works, I'll answer your questions. So thank you for your time. I love doing these things. I'm excited about this. We are in the midst of a once in a lifetime opportunity in these markets because of the debt that countries are running up around the world and the physical debt that people have as individuals. This is going to be a game changer that no one can predict just where this is going to end. But those people that choose to accept the risk and play it right are going to have enough wealth to transfer to another generation after taxes. Take care, and thank you so very much.